Hello friends, hello professionals, and welcome to my channel, The Sea of Regulation. For those of you that are new to the channel, my name is Simone Martin and I am a financial services regulator. Now, the purpose of this channel is to explain things that are touching financial services regulation and how they would impact you as an individual. And today's episode is going to be a bit different. You might notice I'm dressed down a bit or maybe dressed up. We're going to be focusing on the regulatory ecosystem and how it impacts you, the average citizen. So before I get into this, let me get my usual disclaimers out of the way. I am a financial services regulator. I am not a lawyer and I'm not a professional advisor. So the views on this channel are all my own and do not represent any regulatory authority or international standard setter. Now with that out of the way, let's dive in. So first I need to explain a little bit about what regulators do, or at least what our mandates are, and it's enshrined in law for pretty much every regulator. Part of our roles involves protecting the public, educating the public, and supervising financial services activities. So that includes licensing and supervising and taking enforcement action from time to time. But there's a bit more that I don't think people quite get in relation to financial services regulators, and they don't really think that they need them. Now, financial services regulators are a bit like mechanics, but it's more likely that you're going to need an actual mechanic for your vehicle 100 times more than you will want to see a regulator. And if you're a regular person within the public domain, you should essentially not see your regulators servicing the financial services ecosystem. Now, what does that mean for you as an individual? Well, protect the public. So in our protection of the public, we issue guidelines, statements, certain documents, but ignore that for a minute. The actual regulation of financial services entities means that we make sure that they have certain things in place to protect you from misconduct, from fraud, from just general bad behavior. And what does that mean in practice? Well, if you're going to buy an insurance policy, so you're going to have some insurance underwritten, you have to have certain disclosures by the insurance provider in terms of what that means. And how does that protect you? Well, that means that you don't sign the dotted line for a particular policy and provide payment of that premium without understanding what you're getting. It is actually an international standard for there to be fair and clear communication on the insurance core principles. Now, the insurance core principle that is relevant is a bit more in depth, but essentially that is what it distills to. And there are several core principles that we have to make sure in the insurance market are applied. But let's look more broadly. You go to a bank. We want to make sure that when you access the bank for certain activities, that you know upfront what is happening and that you have certain recourse for activity. You would not bank with any banking institution if it were that there was a risk of you depositing your money in a savings account and people just stealing your money. Now, that is part of regulation. We actually require the banks to have certain safeguards and systems in place to prevent that from happening. And in terms of misuse of money, so again, there are lots of embedded security checks or internal controls, as we call them, to make sure that things don't happen that would put you, the average consumer of a financial services product, at risk. Now, that is you as an individual, but it actually applies to anyone who is using financial services. It applies to other businesses. It applies to institutional investors. It applies to cross-border transfers of money. And that broad application may get lost. And like I said, if it is that your regulator is very visible in relation to protecting the public, then it may be an indication that there may be something that needs to be adjusted. Yes, we do issue guidance and press releases, and we do educate the public in different ways. And that's not the type of visibility that I'm speaking about. When you see regulators, it typically is when we're taking enforcement action. Those get the media headlines. No one is actually checking on a regulator when we're approving a new licensee or when we're approving an individual. That doesn't get press, and nor should it. But nor should the systems that we require to have in place for financial institutions to have in place to protect you. And that is one of the things that I think is so important that people don't get. Now, there is one pet peeve, and I've mentioned it in a very early video, one of my first videos, Pet Peeves of the Regulator, and I'll link it in the description below, that I personally have that happens that is meant to safeguard you as an individual and the financial system, but sometimes it's miscommunicated as blame the regulator, when it's not really to blame the regulator. And what am I talking about? Customer due diligence. It keeps coming up. It's very topical, especially now in the FinTech space. But before I get a little sidetrack on the FinTech space, because I think it's important for the FinTech space to understand right touch regulation. It's not every regulator that wants to regulate everything in the FinTech space. We do recognize that there's, well, some of us recognize that there's a space for that to grow and to evolve. But banks, I'll just hit on the banks for a minute because this is where it tends to happen the most. When you go in, you want to get a loan, open a new checking account, open a savings account, something, and the bank says, well, I need to update your due diligence information. And you as the consumer will ask, well, why do you need this information? Utility bill and passport copies and all these other things to prove your identity when you've been banking with the institution for like 15, 20, 30, 40 years. And the bank official says it's because of the regulator. That is one of my biggest pet peeves. It's not because of the regulator. It's because it's the law. And now why would we require and administer financial services regulation in that vein? It's one of the provisions that's very common for anti-money laundering and counter-terrorist financing purposes. But it's also to make sure that, you know, you're still the person that has access to the money. It's still your account. And to make sure that they're able to do something else in relation to you as a customer, which is transaction monitoring. And that is something that helps safeguard you. If you get a salary of just call a number, $5,000 a month in whatever currency, and you have typical transactions that are pulled from that account, $1,000 for rent, $500 for childcare, another $500 for groceries and other utilities, and they have developed a transaction pattern for you, the minute that your account is accessed for a $3,000 transaction, that falls out of your normal scope of activity, and that can raise internal triggers within the banking institution. And what that does is that it allows the bank to then stop what could be a hack of your account. Maybe somebody stole your card, maybe somebody accessed your password. We put a lot of information on our phones right now, and there's something called a SIM swap. So there are lots of ways that criminals would look to get at your money and steal it. And that's how you rob a bank these days. You don't try to rob a bank with a gun and a handkerchief over your face. You go and you try and hack somebody's account. But because now the bank has established certain transaction patterns for you, they can safeguard you from possible theft of your money. And guess what? That is something that is embedded in regulation, and that is something that regulators check on. So again, these questions might seem out of place. You might think it doesn't make sense, but these are some of the things that are in the background in the ecosystem, the regulatory ecosystem, that are necessary to help safeguard you as a regular customer. Now, the last thing that I want to touch on is when things go wrong. Things do go wrong sometimes with your service provider and you as a customer, and there is sometimes a disagreement. You get upset, this isn't going right, something is wrong, I don't agree with this, and a lot of individuals don't know that if you've had this back and forth and taken your time to actually write to the institution. So it could be an email, it doesn't have to be a letter. Snail mail is not necessarily the only way to do this, but you've engaged and you have your paper trail and you're not getting recourse and you do believe that you've been wrong, guess what? You can complain to your regulator. No, I'm not saying that your regulator should be your first point of contact, but in many jurisdictions, the regulator also fields complaints from the public if it is that they are aggrieved and that they've not been able to find resolution with that financial services institution. If you knew that already, drop it in the comments below. And if you've ever had a situation with a financial services entity that is regulated and you've had real issues that you think have not been addressed, comment below, because it may be that you can still address those issues. Even if you don't get something in as a fix for your issue, what it does, it flags to the regulator that there's something potentially wrong that could harm other consumers. And why I'm saying that you may not get something back, a lot of time may have passed. So you may have exhausted if there's a statute of limitation in your particular jurisdiction, because in some jurisdictions, certain complaints can be time sensitive. But if you complain to your regulator, you stand a better chance sometimes of getting towards a resolution. Now, there are a lot of other aspects that I can touch on in relation to how regulators help to actually protect consumers, the average person, but I'm going to end it there. And I'll probably come back in another video to just explore a bit more on some of the things that you will see as a customer. You may not understand that that is a part of the regulatory ecosystem. So I'm going to end it here. You know to do the usual YouTube things, right? Like subscribe, hit the notification bell. If you find this valuable, definitely share it with at least 5 of your friends, because guess what? Everyone out there is a regular person using a financial services product, including me, which is why I'm dressed down or up, depending on which way you look at it. And in using financial services products, banking services, insurance, you might have a pension fund. There are a number of things that are there that people use every day that touches regulation, but you don't necessarily recognize it. So if you can think of something else, or you have a particular question in relation to, it's come up and I want to know how does this relate to what regulators do, definitely drop it in the comments below. And until then, guys, I'll catch you on my next video.